Welcome to Smart Stock Watch. Today is January 24th, 2025, and we're diving into the latest earnings report from South Plains Financial. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. South Plains Financial, the parent company of Citibank, has just released their fourth quarter and year-end 2024 financial results. It's an interesting report, especially given the economic challenges we've seen recently.
Revenue and profitability overview. Let's start with the top line. South Plains Financial reported a net income of $16.5 million for the fourth quarter of 2024, which is a significant increase from both the previous quarter and the same quarter last year. John, what are your thoughts on this?
Absolutely. The net income growth is quite impressive. It rose from $11.2 million in the third quarter of 2024 and $10.3 million in the fourth quarter of 2023. This growth is reflected in their diluted earnings per share, which increased to 96 cents, surpassing the forecasted EPS of 66. This indicates strong profitability and effective cost management.
Interest income and margin expansion. John, can you elaborate on the interest income and margin expansion for South Plains Financial?
Sure. The net interest income for the fourth quarter was $38.5 million, up from $37.3 million in the previous quarter. The net interest margin also expanded to 3.75%, which is a positive sign. This was driven by an average yield on loans of 6.69%, indicating that the company is effectively managing its interest-earning assets.
Non-interest income and expense management. Let's talk about non-interest income and expenses. How did South Plains Financial perform in these areas?
Non-interest income increased to $13.3 million, primarily due to a rise in mortgage banking revenues. On the expense side, non-interest expenses decreased to $29.9 million, largely due to a $1.4 million reduction in personnel expenses. This reflects the company's focus on cost-cutting and efficiency improvements.
Loan and deposit trends. John, what can you tell us about the loan and deposit trends for South Plains Financial?
Loans held for investment grew to $3.6 billion, showing a healthy increase in loan production, particularly in commercial real estate. Deposits totaled $3.62 billion, with non-interest-bearing deposits at $935.5 million. This balance sheet management is crucial for maintaining liquidity and supporting future growth.
CEO's perspective and future outlook. Finally, let's discuss the CEO's perspective and the future outlook for South Plains Financial. What did Curtis Griffith have to say?
Curtis Griffith expressed pride in the company's performance, highlighting their conservative approach to risk management and liquidity optimization. He mentioned a positive outlook for 2025, expecting low to mid-single-digit loan growth, and noting that deposit pricing is falling across their markets, which should support margin expansion.
Key takeaways. In summary, South Plains Financial has delivered a strong fourth quarter with significant improvements in profitability and margin expansion. With a positive outlook for 2025, the company seems well positioned for continued growth. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing South Plains Financial's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe. We'd love to hear your thoughts on South Plains Financial's performance in the comments below.